In this video, traders, we're going to look at one thing that you still need to have when scalping Forex, and that's patience. Stay tuned. Hey guys, warm welcome to you. Alright, so when you're scalping Forex, when you're scalping any market to be honest, a lot of the illusion is that you can trade very, very frequently, you can kind of sit in front of the screen, you can enjoy the process of trading, which is why, let's be honest, why many people scalp, because they like the challenge, they like the kind of speed required, they like that instant feedback. There's a lot of positives for scalping. There's a lot of negatives as well when I was going into this video, but of course, there's the chance that you're never going to get onto a big runner, you're always in the market, your commission costs are high. I've done pros and cons of scalping before, but if you decide to go down that path, then there's something that you have to be very mindful of, and that is that you still need to be very, very patient. I'm going to look at a chart in a moment and kind of explain my thought process behind this. But I see that many scalpers fail because they are impatient. And they think, well, I'm a scalper, I need to be trading all day, every day. And that's not the case. There are times when you just need to be out of the market and not getting involved. And one thing to remember, guys, is that the number one asset you have, aside from trading capital, of course, is your focus and your ability to process that information quickly and react to it. So if you are jobbing around for, let's say, 10 ticks, 10 pips, 6 pips, maybe a bit tight that, but whatever order of magnitude it is, you need to be alert, because if your entry is a little bit late, then your risk reward ratio is screwed up. You end up missing the trade. If it's too early, you get stopped out. It's very, very, high level skill required. But to make life easier for you, the best way to do it is to have patience and wait for levels where there's likely to be, or opportunities where there's likely to be a scalp setup for you. Because the biggest problem you have is when you're trading and you're undoing all the good work and you're scalping in an environment that's really not conducive to your setup and strategy. There's no real edge there, there's no supply-demand imbalance, you're not getting those little pops that you can fade or follow, and it's just drifting around. Then you end up giving away commissions, giving away spread, giving away profits. So focusing on the right time is really, really key. So what is the right time? Well, if you look at, imagine this chart here, whatever currency pair you're trading, you've got yesterday's low, yesterday's high. Now, make sure you're subscribed to the channel, guys, because I've done a video where I've talked about all the points when it's very useful to be scalping, but I want to kind of cover it a slightly different angle in this video. And look, if you look at this kind of chart, average chart, normal day-to-day stuff, this scenario or this situation here, there's not a lot going on, right? It's reasonably quiet, very choppy, couple of down candles, up candles. I call them dirty candles, i.e. if you've got a red and green candlestick default setting, it's one red, couple of green, one red, not going anywhere, back and forth, stuck in a range, very choppy, very hard to scalp because you don't see any edge there. You just see a bit of buying coming in, a bit of selling coming in, bit of buying, a little bit more buying, a little bit more. There's no real pattern to it. It's easy to scalp when you can see supply demand shifts on the actual tape or on the short time frame whatever you're trading. Now, so then you're ignoring this bit. However, if you've got marked on your key levels, when you get to the low, now we're getting interesting, because two things are going to happen at the low. You're going to get breakthrough, fake outs, you're going to get pushes back up, you're going to get lots of things that you can hopefully pick up on the tape. You can look at the tape and you can kind of say, right, I see what's going on, I can scalp this. So this is an area where you probably would want to scalp. You wouldn't want to get involved in that, but there you do. Now, if you're scalping, maybe you're scalping this run up here, but as a scalper, you're probably not holding for the whole of this. So then you go, right, well, I've scalped this area, popped off here, I'm out of the trade now. Now I want to see what happens next. Okay, so now you've got this little consolidation area here. Now, would you scalp that? Probably not. You're probably going to say, well, I'm going to wait until we get a break of this resistance level. Then I'm going to scalp off that. And I'm either going to scalp in the direction, or I'm going to wait until it runs out of steam and scalp this little tiny pullback here. Now, some people say, well, that's crazy, but as a scalper, you're sometimes looking for this, and that's enough to kind of make your bread and butter. You're waiting for the extension, the stretch to run out of steam, the little retracement, bang. And yes, it might seem inefficient to a lot of people who are like, well, look at that big drive there. But that's how you work with scalping. So you would be, okay, I'm into this little bit now. Maybe I'm into this little bit. Okay, now it's starting to fizzle out a bit. I'm not going to get involved until we kind of tag this area here. So rather than looking at, okay, we've got quite a lot of examples here, but rather than looking at literally every single tick over this, imagine this is like a 4-hour period, rather than looking at every little single tick over that 4-hour period, you're actually saying to yourself, right, well, if I can break it down into chunks, yes, it's still quite active. Admittedly, you've got a lot of trade there, but what you're doing is you're giving yourself a break, and you're saying, right, okay, I'm not getting involved in these areas where, you know, I don't have an edge, particularly in here, particularly when I'm drifting down. You might not even be involved in this. You might say, well, I'm in here, I'm now going to wait until it hits the high or it comes back and hits my level and mark some levels on, because you've got to protect your focus, got to protect your ability to trade. So whether you're trading Euro, USD, USD, JPY, GBP, JPY, whatever it may be, having little areas where you know you've got a good chance of scalping success is much better than sitting through the whole of the day or the whole of the time period and trying to focus, because unfortunately what will happen is you'll end up taking, you know, a few bad trades here, and all they do is they end up, especially with scalping, because you're looking literally for a high hit rate and not necessarily a good risk reward ratio, you end up undoing all the work that you do here. Then you kind of got to claw your loss back, so maybe you get to break even a bit here, and then you're kind of making a bit, and the day ends up being, you know, so much worse than it could be if you focus solely on this and like put some in the bank, put some in the bank, wait. Okay, now I'm going to put some more in the bank, put some more. Yes, they're not all going to be profitable trades, but at least if your environment is conducive to your strategy, you've got a much better chance. So still requires patience, guys. Put the levels or the areas that you know that you're better at scalping on, and only scalp during those. And as soon as it starts to change condition, back off and give yourself a break, because that will give you such better results than sitting there trying to scalp every little tick back and forth, up and down on the chart, because that will just wear you out. And the most important thing, guys, you end up undoing all the good work you've done around the levels where you have got the edge. All right, guys, take care. If you're scalping, see you in the next one. Bye-bye.